Hello, this is Bill Scheid from Applied Finance Research with performance statistics updates for the year ending 2023. It's January 2024. We just rolled a new year. Happy New Year, everyone. Let's take a look at the updated performance of a number of our systems. So first up, we have BMR 21. We'll notice here that we have a total return of 673.6%. And from the system equity curve, that's the green line here, we see we're quite near our equity highs. The blue line here is the S&P 500 for comparison purposes, so we can see we're handily outperforming the S&P. The CAGR, compounded annual growth rate, is very strong at 13.7%, and the maximum drawdown remains excellent when compared to the S&P 500. The 60% win rate here is very good for a trend following system. Thinking of the PRX crypto system, which is also a trend following system, and sometimes the win rates there can be in the 30 to 50% range, even though that system is very highly profitable. So 60% is excellent. We can see that the periods outperformed and underperformed is almost 50-50. So we don't get to be surprised when in any given month, year, or quarter, the system doesn't beat the market. It's a long-term system, so what we're going for is this long-term outperformance here. Our median win to median loss is roughly a 2-to-1 ratio. So when we pair that with the win rate, that's why the system does so good in the long term. And a note here that these data do not include the optional volatility stops or short positions, which greatly enhance the performance of this already excellent system. And just as a point of detail, none of the data we're going to look at in this report include those two enhancements. So we're looking at standard out-of-the-box system performance for the systems in their most basic form. So let's take a look next at PMA 5. This system is designed specifically for sustainable growth with very low drawdowns. Now we can see we have a total return of 132.6%. And by the way, here the blue line is a 60-40 all-world buy and hold portfolio. The CAGR of both the backtest and 60-40 is 5.4%. which is greater than the 4% withdrawal rate that many financial advisors use as a rule of thumb here in the US. So remember, our goal with this system was sustainable growth. You could live theoretically indefinitely on the returns of this system if your capital was great enough, because the 5% CAGR covers your 4% withdrawal rate, so you never touch your principal. The maximum drawdown here is only 13.6%. which is helpful because if you're already into retirement, for example, you wouldn't be as likely to run into sequence of return risk, and the drawdowns will be faster to come out of because they'll be smaller. Also of note, the system's maximum drawdown is roughly 1/3 of that of the 60-40 buy and hold. So you get the same return as 60-40, but on 1/3 of the drawdown. What's not to love about that? The win rate here is 66%, which is even higher than what we saw for BMR 21. Let's take a look next at PMA SPY. Here we've got a total return of 381.6% with a CAGR of 10.3%. We're comparing this system to the S&P 500 here in blue, and we see that while the CAGR is greater than the S&P 500, the maximum drawdown of the system is roughly half of that of the S&P. The win rate here is 70%, which is fantastic for a trend following system. And notice here that the periods that the system outperformed and underperformed the S&P are about equal, and they don't total to 100%. That means the rest of the time the system matched the performance of the S&P. The real magic of this system is the way that this system moves to cash in major bear markets, like the COVID crash, like the financial crisis of 2008, and that's what allows us to keep our previous gains and then compound them when the market returns to favorable conditions. Next up, we have PMA SSO. The total return here is 934.2%, which is roughly 3 times that of the S&P, which we see here in blue. This gives us a compounded annual growth rate for the system of 15.7% on a maximum drawdown of 33.5%. So as is common with most trading and investing systems, we have a higher return, and with that goes a higher drawdown. However, the system's drawdown is still quite a bit less than the S&P's drawdown of minus 52.3%. And in fact, very interesting, this system's maximum drawdown is actually less than that of the 60/40 all-world buy and hold portfolio, which came in at 34.7%. So for the same maximum drawdown as the 60/40 buy and hold portfolio, you get 3 times the return of the straight up S&P 500. For me, that's pretty incredible value that this system provides. One of the reasons I love this system so much. The win rate here is 68%, and the system outperforms the S&P almost 68% of the months. If you'd like more information about any of these systems, please visit appliedfinanceresearch.com. This is Bill Scheid. Happy 2024 and happy investing.